Big price cuts happening, guys. Are you ready?
Ready?
Yes, sir!
The housing market is continuing to have some crazy moments here, and we have a lot to cover today. My name is Orlando. Welcome to the channel. Well, guys, listen. If you watched my last video, you know that I was talking about a recession happening. Looks like we're here. It looks like we're in a technical recession. Well, what does that mean, right? Well, that basically means we've had 2 quarters of consecutive negative GDP growth, and today the government released a report showing that we are in the second quarter of that negative GDP growth. But we know they changed the definition, so that's the reason why you see technical recession. So let's first talk about why these price cuts will be coming in droves, guys. What's going to cause these price cuts? And currently you may see price cuts in your local area. I did a video about a week or 2 ago talking about all the locations that are seeing 60% of sellers doing price cuts. So make sure you look in your local area, but let's talk about what the Fed just did, guys. The Fed raised rates by 0.75%, 75 basis points. Now, you guys know if you've been watching my videos that I wanted the Fed to raise rates by 1 point, 100 basis points, but they do exactly what I thought they were gonna do, and they said, no, we're not gonna do 100 basis points. We're gonna scale it back and be a little bit more conservative and do 75 basis points. Now, I know what you're thinking.
I'm smiling, but it ain't funny.
Orlando, what does that mean for me? What does that mean for my mortgage rates?
Well, it just not only affects mortgage rates or individuals who are currently trying to get into the market, it will affect car loans, it will affect credit cards, it will affect everything. So it's just not individuals who are currently looking for a home. It will affect everyone, especially if you are using debt in some shape or form, right? Car loans, credit cards, most people are using those things. Well, it says here, the Fed hiked 75 basis points second time, signals third is possible. Well, we know you're gonna do third is possible, right? We have 2 more Fed rate hikes coming this year. Now, will they be that high? I don't know, probably. I mean, inflation is pretty high right now. The Federal Reserve officials raised interest rates by 75 basis points for the second straight month. Chair Jerome Powell said a similar move was possible again, rejecting speculation that the U.S. economy is in a recession. Well, you know, he made this statement 1 day ago, and then today the report comes out that we're in a recession.
He got cooked.
But hey, you know, once again, the Fed is saying they're going to try to put together this new definition, which is just not negative GDP growth. It's everything together. It's labor. It's all this other stuff. But I'm not going to rehash that. If you want to see that, watch my last video on that. It explains it in detail, guys. And then it says policymakers facing the hottest cost pressures in 40 years. Now, guys, listen, this is going to happen, and I want you to listen to me right now. Rates will continue to go up. Now, I know what you're saying,
Orlando, I just looked at rates and rates have actually come down.
Well, what does that continuously tell me? Well, it tells me 2 things. Either the market is already baking in these rate increases, or number 2, inflation is continuing to destroy us. So one of those 2 things are there, and you have to take precaution for those. So just understand that we have 2 more rate increases. Now we're going to have to see what inflation is doing. Last time we looked at it, it didn't look good, but the Fed is thinking to themselves, if we got gas prices down, then the inflation rate will come down dramatically, and then that will put us in the clear to not do all of these rate increases. And that's what they're hoping, but I have this intuition, I don't know what it is, that the inflation is still going to be high. Will it come down? Maybe it might come down a little bit, but will it go cutting in half? Will it go from 9.1 to 4%? Probably not. Which means it is still high, which means that rates will still need to be increased. So once again, the rate increase that I'm talking about of 7 to 10% range, right? Obviously 10 being the worst, right? If we are in those ranges, it's still expensive. Now, we do know this, guys. How many times have you went to Zillow and you seen these price cuts? How many times have you went to Redfin and you saw more price cuts? How many times have you looked at the history and saw multiple price decreases, reductions, guys? It is happening constantly. I am seeing driving by places, and before it used to be a line out the door. Now realtors are sitting there waiting for people to walk through the door. But why is that? That is because it is now super expensive to get into a home. You're dealing with inflation, you're dealing with mortgage rate increases, you're dealing with tax increases, insurance increases, you're dealing with everything being increased and put on the buyer. And along with that, most people, if you are buying a house, we talk about this all the time, a 2% increase in the mortgage rate is a $200,000 decrease in buying power. Decreased buying power. So imagine where we are right now. We're at 6%. If you were at 3 and now you're at 6, you're probably losing, I don't know, $300,000 of buying power. Now, I don't know about you, but most people cannot afford a decrease like that because it puts you in the area of it not being affordable, or you get into a home that you don't even want to be in. You go from a $400,000 home all the way to a $100,000 home. Ugh. It probably is not even in the same neighborhood. You know, in most cases, if you're in that let's say you're in the $300,000 range, you're basically going backwards and you're on Martin Luther King Street. In a home that you don't want, on a block, on the street that you wouldn't, then you'd be like, hey, I thought I was buying a home. I thought I was getting out of this area. I'm just joking, but I'm serious too.
Come on, man!
So 82% of you guys watching this video right now are not subscribed to the channel. Why aren't you subscribed to the channel? Make sure you hit that subscribe button. It allows more people to see this content, guys, and we want to grow the community. Let's jump back into it, guys. We have a lot to cover here. So let's get into the actual recession here. It says GDP fell 0.9% in the second quarter, the second straight decline in a strong recession signal. Now, it's not a strong recession signal, it's we're in a recession. And that's what's gonna cause all of these cuts, guys. I know, look, I'm giving you the shorthand of it. I'm giving you the news on the housing market so you can make sound decisions. I know this stuff isn't the most exciting news, but I promise you this. If you're looking for a home, these things matter. So we have to give the cliff notes so you know exactly how to approach this housing market. The US economy contracted for the second straight quarter from April to June, hitting a wide accepted rule of thumb for a recession. The gross domestic product fell 0.9% at an annualized pace for the period, according to advanced estimates. That follows a 1.6% decline in the first quarter and was worse than Dow Jones estimated for a gain of 0.03. Now, I want you guys to take a look at this chart here. This chart here, it shows negative GDP growth quarterly. Everything in the blue is positive. Everything in the yellow is negative, right? So if we take a look at the 2020, we saw that area. What was happening in 2020? Oh, yeah, the pandemic. The pandemic. So that was happening during that time. And if you guys really look at this, it's negative 5.1 and then it's negative 31.2%, which makes sense because the economy was shut down. This is when the government started pumping tons and tons and tons and tons of money into the economy. And that's the reason why we see this big blue tower. This huge blue tower of the biggest growth you possibly could see. 33.8%. So that's when PPP loans and all that other stuff was being shot out. That's when stimulus checks and all that other stuff was being shot out into the economy. Then we see it kind of dwindles, and then we're at where we are right now, which is the negative 1.6%, and then we see the negative 0.9% for the second quarter of this year. Now, these are slight. These aren't huge. This isn't the same as the negative 5.1 and whatnot, and obviously not the huge one during the pandemic. That'd be crazy. But we are seeing this cooling down. The reason why I want you guys to pay attention to this is because all of these things that you're seeing will affect price cuts. With continued rising cost of inflation, with continued rate increases, you're going to see individuals drop down the prices of homes. I just saw my neighbor down the street drop his price down $40,000.
Damn!
At first, he was at, $440,000. Now he's at $400,000. So what will happen if he can't sell his home in the next couple of weeks or month? Is he going to drop it another 30? Is he going to drop it 20? I don't know. But I do know this. He is in a situation where he has to move, so he's going to have to do something. And you would think that the price drop would bring in more people, but people are still looking at it and being like,
I can't afford this $400,000. It's still too high.
you're probably, need to drop that another $40,000 to make it affordable for most people. Not everyone, but for most people. Let's go on to what some economists are saying about this housing market. It said U.S. is facing the perfect storm for a 2008-like housing crisis, says an economist. The economist, great. He's going to say we're going to explode and burn and all that other stuff. But that's not the piece of information I want you guys to see. The piece of information I want you to see, there was an interview done with the National Association of Home Builders, right? He was a CEO. So let's see what he has to say. And let me tell you what, guys, especially, listen to me, guys. If you are trying to get a home built, you need to listen to this, okay? Jerry Howard, CEO of the National Association of Builders, warned of a grim outlook for housing market due to a halt in new construction during an appearance on Fox. All across the country, builders are telling me now the traffic is slowing down. They're telling me that they're having people talk about canceling existing contracts. He said, it is a pretty grim outlook right now from where I sit. Now, that is a builder of the National Association of Home Builders, right? The CEO of that. He says this is getting very grim. Now, a lot of buyers are canceling their contract because if you guys don't understand how this works with contracts, you aren't locked into your mortgage until either, I think, the very end of the construction or once it's actually built. So these people are seeing their interest rates go up, 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 and up. And they're thinking to themselves,
I don't know if I can afford this anymore. My situation has changed drastically, and I don't think that I'm going to pay 2 times as much as the mortgage I initially got approved for. I'm not going to do that.
so they are canceling contracts. And then here's another thing that most people don't understand is when you sign a contract, not only are you not locked into the mortgage, but there's normally an escalation clause in the new construction. So if costs go up on material, then that means that the price of the home goes up with it. So what are home builders doing? They're increasing the cost, guys. They're increasing the cost because they're saying wood costs more, this costs more. And then you have a mortgage on the other side that is saying you're going to have to pay more in mortgage on top of that. Nobody's playing that game anymore. Most people are saying, I'll take the hit in my deposit and give that deposit to you instead of getting into a $500,000 home that is worth $400,000 or $350,000 because of inflation and because it's an overpriced home. And then on top of that, pay a high mortgage on top of that. They are not playing that game anymore. So why did I tell individuals that this is super important for you to look at? Because if you are trying to get a home built for new construction, then this fits you perfectly, knowing exactly what you can leverage when it comes to these home builders. Can you go in and say, hey, look, I want extra amenities. I want this, I want that, the price this. Yes, you can. Will you get it guaranteed? No, you won't. But you have the leverage. You have the leverage right now to go to these home builders and say this. But I just want to point that out to you guys. Prices are continuing to come down. I'm seeing it on Zillow. I'm seeing it on Redfin. Prices are being cut dramatically, but they're still overpriced. I do want to drop that in there. They're overpriced still, but they're getting cut, and we're going in the right direction, guys. So hopefully you got value out of this content. I'm gonna need you to watch this next video here. It will help you learn about this crazy housing market, get into your first rental property. Also, check in the description below, guys. I have a membership program and some useful links to get a free credit report. I will see you guys in the next one. Thanks.